Good day. Welcome to another session of Fog Accountancy Tutorials. Now, we are going to continue from where we left off in the part 2 of this lesson by solving the question that we have analyzed in the part 2. So we are going straight to the point because this is just a continuation of the part 2. It's like A and B, okay? So we are going to solve this question together. FOJ Commercial Bank Limited. Now, straight away, I go to the additional information and I start my workings from there. So, property, plant, and equipment is analyzed as follows. So, land and building, 450, but remember that there has been a revaluation upwards to 400, as you can see down there. And so, we are going to first calculate depreciation. Let's calculate our depreciation on all the assets as our first working. So, note 1. Or working 1, depreciation of property, plant, and equipment. That will be the first note. Now, there are 3 of them. Land and buildings, 2% per annum straight line. Of course, we have already discussed that. Computers and equipment, 750, 25% straight line method. Motor vehicles, 25% straight line. Now, computers and equipment and motor vehicles, nothing happened to them. Land and building, there was a revaluation upward to 400,000. And therefore, the remaining useful life, we are told that the directors caused the properties to be revalued in January 2019. The valuers assigned value of 400,000, but advised that the remaining useful life should be maintained. Okay, so in the beginning of this year, 10 years had already elapsed from what we discussed. So we have 40 more useful life, 40 more years of the useful life remaining. And the new value from 1st January of this year is 400,000. So let me just put 3 zeros up here and a currency sign so that we can also work without the zeros. So it means that depreciation for land and building will be 400 over 40 years. And that is going to give us 10,000 or 10 because 3 zeros are up. So this is how the annual depreciation charge will be for land and building. And then for computers and equipment is 25% straight line. And the cost, once it's on the straight line method, it means we are calculating both of them on the cost. You see, for straight line method, we should have calculated all on the cost. But because there was a revaluation for building, that is why we moved to the new fair value. But the other two, we are going to calculate straight line method and it's on cost. So 25% and the cost is 750. So for computers and equipment, the depreciation will be 25% of 750. And that's going to give us 187.5. So this one gave us 10. Let me show it here so that they'll be on the same line. And then the final one is motor vehicles. The cost is 40 and the rate is 25%. So motor vehicles, 25% times 40. And that gives us 10. So in order to get the total depreciation on property, plant, and equipment, 10 plus 187.5 plus 10 again gives us 207.5. So we are done with the first workings for depreciation. You need to arrange your work nicely for ticks. So now that we have our depreciation, why are we going to even treat depreciation in the financial statement? Depreciation will be treated as part of operating expenses. And you know that we already have some operating expenses in the trial balance. So the next working is advisable. Let's do the list of operating expenses and get the total at once. So we are going to do workings for operating expenses as workings 2. So workings 2 will be for operating expenses. So we have our operating expenses. Now, for operating expenses, we were given an operating expense. Let me put the 3 zero signs here again and the currency. Now, we were given operating expenses in the trial balance. And then we were also given some others that are also falling into the category of operating expenses. If you go into the trial balance, you will see that operating expenses 2,400, and then there is directors emolument, which is also an operating expense, 20, and then auditors fees of 40, and then we're also going to add the depreciation on PPE. So what we are trying to say is that we will first write the operating expense that is given as per the trial balance, and then we'll add the other ones. So operating expenses, let me show my currency sign with 3 zeros up. So operating expenses, I'll first write operating expenses as per trial balance. So per the trial balance, operating expense that was given is 2004. I know that is where some students will just pick that figure, take it straight to the statement of profit or loss because they think operating expenses has been given. But it's not always that straightforward. Okay. Then we also have directors emolument of 20 and auditors fees of 40. So let's add that. Directors emolument of 20 and then auditors fees of 40. So these are all operating expenses. And then let's also not forget that there is depreciation of PPE. So depreciation of PPE coming from working 1. And the total amount is 207.5. So when we add that, the total operating expenses will be this plus that plus that plus this. And that is going to be 2,667.5 Ghana cedis. So we are done with working 2 or note 2, which is operating expenses. Remember that when we are preparing the main statement, we'll indicate where necessary, where the notes numbers, so that the examiner can refer and then give us the appropriate marks. And then the next thing that we have to look at, I'm going in the order of the additional information. Most of the workings are in the additional information. So we go there and you realize that we are still not done with the PPE. Now, we need, if we have depreciated PPE, we need a final PPE balance to be taken to the statement of financial position for property, plant, and equipment, the carrying amount. And there are 3 different property, plant, and equipment figures. You can decide to do your own scattered workings, get the net book value for each of them and add. But I always prefer to use the PPE schedule because the PPE schedule will give you all at a glance. And it's very easy to use. For those of you who don't know how to prepare the PPE schedule, I have a special video dedicated to that. Aside the video on IAS 16 PPE, part 1 and 2, I have a special video for the PPE schedule, IAS 16. So go and look for that and study. I'm going to use the PPE schedule. It is always easy because you can use it anytime you are preparing published account for any company. And it is always very easy to use because it helps you to get the figures at a go. So I'm going to prepare working 3 as the PPE schedule, the property, plant, and equipment schedule. That will help us to ascertain the value of PPE to be included in the statement of financial position. Okay, so working 3. So let's prepare the PPE schedule. Working 3, PPE schedule. So the property, plant, and equipment schedule. Now pay attention to the PPE schedule. There are 3 items of PPE. So we are going to create a column for each of them and then we create the total column and then we leave a space for particulars. So let's say this is the space for particulars. We have land and building. And then we have computers and equipment. And then we have motor vehicles. And then there will be a column for total. So we'll show our currency sign with 3 zeros up for each of them. So this is a typical PPE schedule. Then what we are going to do is that, for a PPE schedule, it's in 2 parts. That all that we are looking for is the net book value or the carrying amount to be taken to the statement statement of financial position for PPE. And we are not going to take them as single assets. We will take the total. That is the need for it. That is why we need to create a total column. So what we need to do is that to get a net book value, it is your cost minus accumulated depreciation. So the PPE schedule is in two parts. Create a column for cost, where can get your total cost. Create a column for depreciation, where can get a total accumulated depreciation. Then your total cost minus your total accumulated depreciation will give you the net book value or the carrying amount, which you are taking to the statement of financial position. So let's begin with the cost aspect. It means everything under cost comes here. And we are going to begin with the balance brought forward for the various assets. So for the land and building, we go to the additional information. You see that the opening balance was 450. Someone will say it was revalued. Yes, we'll cater for the revaluation. So we are going to pick the additional information one. All the items under cost 450, 750, 40 will be the opening balance for the cost. And then under the accumulated depreciation, the figures you have here, 90, 320, will be the opening balance for the accumulated depreciation. So we have 450 for land and building. We have 750 as opening balance for computer equipment. And then we have 40 as the opening balance for motor vehicles. In all, the total will be 1,240, which is already displayed in the trial balance. But we just add 1, 2, 3 together and we have the total. That is how the total column is derived. After the balance brought forward, under the cost, there are 2 or 3 key things to look at. The first one is that, was there any acquisition of any of the assets within the year? You add. Then you also consider, was there any disposal? You take it out. Take out the cost portion of the disposal. Then the last aspect, was there any revaluation? Then you do. So these are the 3 things: additions, disposals, and revaluation. Now, in this question, there was no mention of addition of any asset, neither was there a mention of disposal, so we are free. But there was a revaluation for one of them, which is the land and the building. And so we'll write revaluation. And when we did the revaluation, remember, when it comes to the revaluation, you are only interested in the revaluation surplus. And when we calculated the revaluation surplus, it was 40. Let me show you how we got it. 450 was the cost bought 10 years ago, and then we divide by the useful life of 50 years, or you can use 2% to calculate the depreciation. And it's going to give you 9 per year as depreciation, times 10 years gives you an accumulated depreciation of 90 cedis. So an asset that you bought 450, if it has accumulated for 90, it means you have a net book value of 360 on the 1st January this year when it was being revalued. Now, if the net book value was 360 and the revaluation is now 400, we take 360 out of 400 and we have 40 as the revaluation surplus. Now, when it comes to the PPE schedule, all that we need here is this 40, the revaluation surplus. So you need to do this calculation somewhere. If you don't understand this process, you cannot get the revaluation surplus. And you only come and put the 40 here for your revaluation surplus. Please take note. You ask me, how do I get the 40? Do it somewhere and then bring the 40 as a revaluation surplus. But you need to show the workings as well. So 40, and then we continue from there. So now that we know that there was an upward revaluation of 40 for the asset, then we can now close it. So it means the same 40 will appear on the total side. Okay, so there was nothing else for cost. Remember, I've told you it's only 3 things you ask yourself: additions, disposals, or revaluations. And someone will think that, is the 40 not added to 360? Why are we adding it to 450? What happens to the difference of the 90? Relax. That will be shown in the depreciation. And you see how beautifully it will play out. So we have 490 here for total, 750 for total of the cost, 40 for total, and 1,280 for total. Now we are done with the cost column of the PPE schedule. We come to the depreciation portion. So under the depreciation, There will also be an opening balance for all of them, which will be the accumulated depreciation balance that we have in the trial balance or additional information. So we come and we realize that in the additional information, the opening balance for accumulated depreciation, land and building is 90, computers and equipment is 300, and motor vehicles is 20. Oh, so that 90 was already given in the question. You see that I didn't even pay attention to the fact that the 90 was given. And so straight away, you didn't even need to go through the calculation I did. I mean, going straight to the additional information, 450 minus 90 means there was 360. So if it's 360, an upward revaluation is 40. It's an easy way to get your 40 and bring it. So case closed. Now 90 is the opening balance here for the depreciation, and there was a 300 opening balance for the equipment and computer, and there was a 20 for motor vehicles, and all of them summed up to 410, which was also displayed in the trial balance. Now when it comes to depreciation, only two things after the opening balance, only two things will be your concern. We don't care about additions here. We are only concerned about disposals and the depreciation charge for the year, which we have already calculated here. This one, we will bring it here again. So now, since there was no disposals, we are only bringing the depreciation charge for the year. So depreciation charge for the year will be land and buildings, we had 10, right? Computer and equipment is 187.50. So you see that this depreciation that we have calculated, we've used it in operating expenses and we are using it to get the value of the PPE. So if you get your calculations wrong here, it runs through. All right, so 187.5, and then that of motor vehicles is 10. So when we add the 3, we already have the total here, 207.5. So that is all for depreciation. So let's add to get a total depreciation for the period or accumulated depreciation. So we have 100 here, we have 487.50 here, we have 30 here, and then the total here will be 617.50. So now what we are going to do is that we have total of the cost for each of them and total of the depreciation. So we come to the net book value or the carrying amount of the asset which we are actually looking for. And the net book value is cost minus accumulated depreciation. So 490 minus 100 gives us 390 here with a double underline because we are done with that. 750 minus 487.5 gives us 262.5. We do a double underline because we are done with that. 40 minus 30 gives us 10 as the net book value. So we are done. So for the total column, it's an addition of 1, 2, 3 that will give you, or 1280 minus 617 should give you the same answer as the addition of these 3. And when you tabulate, you are going to get 662.5. So now, when we get to the statement of financial position and we say PPE or property, plant and equipment, it is this figure that we are going to pick. So put it somewhere. This 662.5 is the figure we are going to bring into the statement of financial position single-handedly. It is coming as a single figure for all these 3, and we call it property, plant and equipment. And then we will refer that the examiner should check note 3. You will find the PPE schedule in note 3. Someone will say, so it's only this figure that has made us go through all this. Yes. So that is it for the third workings. And I'm sure this is very understandable with you. Okay. The next working we are going to do now, additional information 2 is on tax. And the tax, we cannot calculate any tax now because we will need the net profit before tax to calculate. So when we get there, we'll do the workings for that. Now the next one is on the investment property, III. The investment property was acquired in January 2019. The rental income from the investment property, 90,000, relates to the 3-year period ending 31st December 2021. The bank adopts fair value model in subsequent measurement of the investment property, and fair value assessment at 31st December 2019 puts the valuation at 250,000. So we have already discussed that in the previous video. We are saying that the 90,000 is the rental income, which I said is not part of operating income. So it is other income. So that one If it is for 3 years, we divide the 90 by 3, meaning each year is 30. So this year, we will recognize only 30 as the rental income, and the subsequent 60 goes as unearned revenue. And then also there was an upward revaluation of the investment property from 240 to 250, which also gives us additional gain of 10, which will all go under other income. So we'll say working for other income, and then we'll show our currency sign with 3 zeros up. So what I will say is that rental income from investment property, and that is 90,000 divided by 3, which is going to give us 30. Okay, so 30 is for 2019, and then we'll say gain on revaluation of investment property, which is also the new value of 250 minus the original value of 240 in the trial balance, giving us 10. So therefore, other income will sum up to 40. So this is all for the working on other income. So when we get to the statement of profit or loss, we'll pick 40 as other income, and then we'll indicate working for that. I'm sure this is also understandable. Then we move to the next additional information, which is Ivan, loan impairment provision. We are told that it is 510 for this year. Now, if you go to the trial balance, we are told that loan impairment provision as at 1st January 2019 was 410. So we are only going to do workings to show the movement, and the difference will go as an increase, which is an expense. Okay, so let's come to working 5. And I'll call it loan impairment provision, which is an impairment of financial asset. With my currency sign and 3 zeros up, I'll say opening balance of the loan impairment per the trial balance is 410, and then the closing balance or balance as per 31st December or as at 31st December will be 510. So when we net it off, we have 100. We call it increase in loan impairment provision. So an increase. Now this 100 will go as an expense in the statement of profit or loss, but we'll refer them to note 5, where we just deducted to have the increase or decrease. In fact, the major workings is what we did with the PPE schedule, and these ones are just small things that you should understand. And then we move on to the next additional information. But remember that the closing balance of 510 will be subtracted from the loans and advances in the statement of financial position. And then when we get to the statement of financial position and the asset, we'll pick the new value of 250 for investment property. So please take note. We move to the next additional information, which says, in compliance with the Banking Act, profit after tax is to be 25%. 12.5% of profit after tax is to be transferred to statutory reserve. We cannot do any working on that now, except we get to the changes in equity and we already have the profit after tax. So we move on. Please take note, we have already done workings for other income. There is also other operating income. So I'm going to do workings for that one as well. So please take note, other operating income. Before I forget, that one, there is nothing about that in the additional information, but there are some income items in the trial balance which we must just sum up. That's all. Just add them into one figure. You can't take them individually. So we call it other operating income, and there are 2 of them. That is, the first one is the gains on foreign exchange or foreign currency gains on foreign currency transactions, and the second one is the dividend income, which follows. So working 6, I'll call it other operating income, and I want you to differentiate other income from other operating income. Now there are 2 of them here. Other operating income, the first one is gain on foreign currency transactions, and that one is 40 according to the question. And then we also have dividend income. And the dividend income per the trial balance is 30. So when we add, we have 70 in total for other operating income. I'm sure this is very understandable. So we'll take other operating income and then we'll take other income. All right. The next thing, let's look at the next additional information. On 15th November 2019, the directors paid an interim dividend of 40 pesos per share. No further dividend is recommended for the year. So here, what we need to do is just to calculate the dividend. However, we'll use it in the statement of changes in equity. And so working 7, dividend or dividend paid, because this is not dividend income. So that will be the 40 pesos multiplying the total number of shares, which in this question is 50,000 shares. So therefore, if you are using Ghana cedi with 3 zeros up, then the dividend payment will be 20, or let me say it's 20,000, so that when we are recording it, we'll just ignore the 3 zeros. So it's 20,000, but we'll record it as 20. Okay, so this is how dividend payment will be calculated for the year. Then we continue. In order to satisfy central bank minimum requirement, capital requirement, the shareholders at an emergency meeting on 24th December 2019 approved a bonus issue of 1 share for each one held out of income surplus to be credited at the current market price of 5 cedis per share. This decision is to be reflected in the 2019 financial statement. So that one is 5 cedis times the number of shares, because we are giving bonus for 1 for each holding. So 50,000 shares times 5 cedis. Okay, so working 8, I can say bonus shares. And if I have to put 3 zeros here, then it means that 50,000 shares times 5 cedi per share. That is going to give us 50,000 times 5 will be 250,000. But because of the 3 zeros up, I can just put 250 here, so that we know that we are picking 250 as the bonus shares to be taken to the statement of changes in equity. So when we get there, I'll refer you on this. And then we'll be done with the additional information. But we are not done yet. There are still some workings to be done. Now, let me draw attention to something we discussed in the part 2 concerning the cash and short-term funds. I told you that when we are preparing the statement of financial position, cash is combined, the cash in hand is combined with the cash reserves in the central bank. And in the question, we have cash in hand to be 340 and balances with central bank to be 3,050. So we need to combine that as one. Okay, and so we can call that working 9. And then I will say cash and short-term funds. So that I'll say cash in hand as per the trial balance is 340. And then we'll add balances with central bank. Balances with central bank, which is 3,050. So when you add the two, you have 3,390. Yes, as your cash and short-term funds, which we are going to take this figure into the statement of financial position. I told you it's highly summarized. We don't put these two there individually. We just add up. This is no big deal. We are just summarizing. All right. And then I think that is it. Yes, and then there is loans and advances that has impaired. So I told you that when we get to the statement of financial position, under loans and advances, we have to take out the closing balance of the impairment. So we can also show that as a working 10. So that we'll say that loans and advances, overdraft, loans and advances, balance in trial balance. The figure in trial balance is 15,700. As you can see, 15,700 for overdraft loans and advances. 15,700. And then we less loan impairment. The loan impairment closing balance is 510. So when we take it out, the final balance to take to the statement of financial position will be 15,190. That is working 10. So ladies and gentlemen, this will be the workings that I'll do. But I'm going to now begin to prepare the statement of profit or loss. As we move on, if it becomes necessary to do any other workings, I'll do. But what I want you to understand is that in the exam, try and then do all your workings and make it so nicely presented before you start the actual work. So the main requirement is what we are going to start. All that we did were part of the notes to the financial statement. Okay. We are now going to prepare the statement of profit or loss for Fog Commercial Bank. Now, so let me write Fog Commercial Bank as the name of the company, Fog Commercial Bank Limited. And then I'll say statement of profit or loss for the year ended 31st December 2019. So that I'll put my 3 zeros up here in the currency, and then I'll put notes here. So I'm going to prepare the statement of profit or loss in a summarized form. In fact, I'm not going to waste time with these statements because I've done a lot of the explanation. We've given the format and I've done the workings. So straight away, now we are going to record the format. What do we begin with? Interest income, less interest expense. Then you have your net interest income. Then you add commissions and fees income. Then you add other operating income to get your total operating income before you take out operating expenses and the loan impairment to get your total operating income. Before you now come and add the other income, remember, get your operating income before you add other income. That is why I separated operating income from other income. So please, let's begin. Interest income. There is no workings on interest income, so we won't indicate any note. We pick it directly from the trial balance. So interest income from the trial balance is 4,950. And then we also take the interest expense directly from the trial balance, which is the interest on customer deposits. That is the interest expense, 850. So interest expense or interest on customer deposit, 850. I put that in bracket. So my net interest income is 4,100. So straight away we get that. And then we now add the commission and fees income. So we go to the question, and that one is also given to us directly. We didn't do any working. So all these are free marks because no workings on them. Commission and fees income, that is 900. And then we add other operating income. So other operating income, we did the working on that. Other operating income. And I'm stressing again that make sure that you don't mix up other operating income with other income. So other operating income, if you could recall, was from working 6. So I'll write 6 under the notes. And the total figure we had for other operating income was 70. So now we can add and we have our total operating income. Very simple to prepare. And the total operating income is 5,070. So now we take out operating expense and the loan impairment. Remember I said we separate the loan impairment from the operating expense, but both of them are part of operating expenses. So the operating expenses we did a working for that. Operating expenses was note 2. After depreciation, note 2. And the figure we had, I know you have the figures, so you can also cross-check. The figure we had for operating expenses is 2,667.50 in brackets. If you can remember, we are subtracting. And then we bring the loan impairment provision. And here we are looking at only the increase. And the increase was 100 Ghana cedis. That is also put in bracket. So now that we are netting off with the operating expenses and the loan impairment provision too, we had a working for that. And that is note 5. So now that we are taking this out, we now have the net. If there was no other income, it would be the same as net profit before tax. But because there is other income to add, we say net operating income. And that gives us 2,302.5. That is if you subtract these two from the total operating income, you have your net operating income for the bank. Then you can add the other income before you get the profit before tax, so that at least we'll know what profit is actually coming from operations and which ones are just from other sources. So we now add other income, which we had 40. So other income is from working 4, and that was 40. So when we add, we have 2,342.5, and we call it net profit before tax. And then we can take our tax. Now, the tax, I told you that there is no deferred tax, so we just calculate the percentage. We are given in the question that tax is 20% of the profit, which we have already explained. So the corporate tax is 20% of 2,342.5. Of course, you can prepare this outside as a working again and then bring the summarized figure, because we are dealing with the summarized financial statement. So I don't need to show it here. I can say our workings were up to 10. So I can say working 11, corporate tax. And that is 20% of 2,342.5. So we are now calculating because we now have the net profit. So that gives us 468.5. So 468.5 in brackets. And then finally we have our net profit after tax. And the net profit after tax is 1,874. So ladies and gentlemen, this is your statement of profit or loss for FOG Commercial Bank Limited. So you add this to your notes. And remember that the tax, according to the trial balance, they have already paid 100 cedis for the tax. This figure of 468.5, they've paid 100 cedis. So all this figure will not go as a liability. When we get to the current liability, we'll take 100 cedis that has been paid from this in order to arrive as the tax liability. So that is that. So I'm going to use this piece. I'm going to clean this, and I'll use this piece to prepare the statement of changes in equity. So this is your statement of profit or loss. Okay. So let's prepare the statement of changes in shareholders' equity. Statement of changes in equity for the year ended 31st December 2019. Now, according to this question, there are 4 items of equity. So you can see that there is a stated capital, which is constant. There is an income surplus balance, which is constant. Then, of course, there was an opening balance for capital surplus, as you can see here. And then there was a statutory reserves. So we are going to create 4 columns: stated capital, income surplus, capital surplus, statutory reserve, and then the total column. So I'll leave this space for narration. So stated capital, then income surplus, and then capital surplus, and then the statutory reserve. And then I'll create another one for total. So I'll create a currency sign with the 3 zeros for each of them so that we can easily enter our figures. All right. So what you do is to begin with your opening balance. So balance brought forward. For stated capital, the balance brought forward is 100. For income surplus from the question, the balance brought forward is 1,700. And then for capital surplus, the balance brought forward is 20. And then the statutory reserve, the balance brought forward is 640. So 640. So what we need to do, the total column, just as we did for the PPE schedule, is just to add up. So the total equity balance, if we add all of that, will be 2,460. So having ascertained that, then we now begin to examine the changes for each of them in the year, because we are examining changes in each of the equity items. Now, how did the stated capital change? Did it actually change at all? Yes. Remember, there was a bonus issue, so it will increase the value of the stated capital. And when we calculated the bonus issue, we had 250. So we'll see bonus issue. How did we get the 250? It was 1 for each share held, and at a value of 5 cedi per share. So 50,000 shares, that is there times 5 cedis, giving us 250,000. But we already have 3 zeros up, so we put here 250. But the interesting part is that we were told that this 250 will be funded from income surplus. If you look at it again, you'll see that it is written here that in order to satisfy the central bank minimum stated capital requirement, the shareholders at an emergency meeting on 24th December 2019 approved a bonus issue of 1 share for each one held out of income surplus to be credited at the current market price of 5 cedis per share. So what we are trying to say is that this bonus issue of 250 cedis, even though it's increasing stated capital, but the agreement was that it should be funded out of income surplus. So this 250,000 will be funded from income surplus, meaning that it will be a reduction to the income surplus balance. It's more like a transfer, transferring funds from income surplus to pay for stated capital, and therefore the net effect on the total will be 0. There will be no effect on the total because we took out this money we just transferred it from one item of equity to another. So there is no addition to the total equity. We are just trying to change the dynamics. So that is it with the change. And that is the main thing that is going to change with the stated capital. I told you that you move one by one and then you move on. So we move to income surplus. Once we know what has changed with stated capital, what has changed also with income surplus? For income surplus or retained earnings, we know that it is about profits and dividends and any transfer. Of course, we've done one of the transfers. So we add our net profit after tax. The net profit after tax that we had, 1874, will be added to the income surplus as a change. It will increase the income surplus balance. And then we'll pay dividend out of this. But remember that there was also a transfer from income surplus to statutory reserve. Okay, so let's look at the dividend. Now, we are told from the question that on 15th November 2019, the directors paid an interim dividend of 40 pesos per share, which we have already calculated as 20,000. Okay, so we have 20,000 for dividend. So once we have 3 zeros up, we put 20 here in brackets. And in fact, it will also go to the total column, just as the net profit after tax is also going to increase the total. So whatever we put here, we extend to the total. The only time we don't put it at the total is when it's a transfer. So please take note. Then the dividend is also paid. And then the final thing under the income surplus is that we are supposed to make a transfer according to information vein. In compliance with the Banking Act, 12.5% of profit after tax is transferred to statutory reserve. So 12.5% of profit after tax. Where is the profit after tax? 1,874. And we are going to transfer 12.5% to the statutory reserve. So you need to calculate as workings. 12.5% of 1,874. And if you punch your calculator, it's going to give you the answer as 234.25. And so this is the amount that we are going to transfer from the income surplus account to the statutory reserve balance according to the regulation. So we'll say transfer, you do this somewhere as part of your notes. So transfer from or transfer to statutory reserve, or you can just put transfer here. Then you write 234.25. It will be in brackets, and then you move to statutory reserve. Under that column, you write the 234.5 as 0.25. Sorry, you write this as positive, and the total will be dashed because I've told you that no transfer will affect the total column. So we have transferred money from the income surplus to the statutory reserve in compliance with the Banking Act regulations. Okay, so that is it, and that is all to have changed with the income surplus. From there, we have to also move to capital surplus, check the question and see if there are changes, and then we can conclude. All right, so when it comes to capital surplus, the only change is the revaluation of PPE. So revaluation of the property, plant, and equipment will increase the capital surplus. And so from the workings that we did, the revaluation was 40,000, if you could remember. So revaluation of PPE is going to increase the stated capital balance by 40. It means the same 40 will move to the total column to increase it. So that is all with capital surplus. For statutory reserve, the only change is what has been effected, the transfer. So it means we are done with the statement of changes in equity. There is nothing more to add. And then when I close this, the final thing to do is the statement of financial position. Okay. So now let's find the totals for each of them to be included in the statement of financial position. Of course, capital surplus is 60, and then stated capital will be 350. The total balance for income surplus, so balance carried down for each of them, is 3,069.75. So it is this minus that plus this minus that minus that. 3,069.75. And then the total for the statutory reserve is 874.25. And then the total, grand total, will be 4,354. So I told you when you add this, you get this figure, and then when you add it from the horizontal side, you are going to get the same figure. This is your statement of changes in equity for FOG Commercial Bank Limited. Now, what I'm going to do is that I'm going to clean all this, and then we'll deal with the final one, which is the statement of financial position for the bank. Okay. Let's quickly look at the statement of financial position. So, statement of financial position as at 31st December 2019. So I'll bring the currency sign and then I'll show the column for notes to the financial statement. I told you this is highly summarized. So we begin with assets, and I told you we list in the order of liquidity. So we are going to begin with the cash. Here you have to remember your format. So cash and short-term funds. And remember, we did workings for this. So we'll go to the notes, pick the figure, and then we show the notes. So the total value for cash and short-term funds was 3,390 from the workings that we did. And it's at note 9. So you can verify what we have done. And then we look at the investments in government securities. Investment in government securities is given to us in the question as 10,900. So 10,900. And then we can look at the receivables from other banks, which is due from other banks and financial institutions. We are just arranging them in the order of liquidity. So that is 1,610 receivables from other banks. 1,610. And then we can look at sundry receivables and prepayment. There is something like that in the trial balance. Sundry receivables and prepayment. That is 500. So sundry receivables and prepayment, 500 Ghana cedis. And then we can look at overdrafts, loans, and advances. And that one, we did a working for that. We subtracted the loan impairment. Remember that in the trial balance, overdraft, loans, and advances are 15,700. But there was an impairment loss on the loans. So we did the working for that from working 10. And the final figure is 15,190. So overdrafts, loans, and advances, 15,190. And then we can now look at, there was an investment in listed securities. So that is general investment before we move to PPE. Investment in listed securities, and that is 160 from the trial balance. No workings was done on that. Investment in listed securities, that is more of a long-term investment, 160,000. Let me put my 3 zeros up. And then we can now look at property, plant, and equipment. Remember that we did a working for that, a PPE schedule. So property, plant, and equipment. That is from note 3. Now, with the overdraft, loans, and advances, that is coming from note 10. So let me indicate that. And PPE schedule is note 3. The total value for our property, plant, and equipment was 662.5. That is coming from the notes. And then finally, we look at the investment property. The investment property was revalued upwards to 250. So we bring the new fair value. So now we have our total assets. Total asset to be 32,662.5. 32,662.5. Ladies and gentlemen, this is how you list it, and this is your total assets. I told you that the main work is with the workings. When we come here, we just pick it up. And then we can move and look at the items of equity, which we have already had total for them from changes in equity. So we just list the various totals, and then we list our liabilities, and then we are done. So let's look at the items of equity. So with the equity items, we already got it from the changes in equity. So I'm just listing them with their totals quickly. So equity, we have 4 items of equity. Stated capital, and the balance there from the changes in equity was 350. That's the closing balance. And then there was income surplus. We are just picking the totals. Income surplus was 3,069.75. And then we had capital surplus of 60 from the changes in equity. And then finally, there was a statutory reserve. And that one amounted to 874.25. And when we added, the total equity was 4,354 from the changes in equity. So we are not going to waste time with the equity. I think we are okay with that because we just did that. Then finally, we can look at our liabilities. with your Ghana cedi sign and the notes. Now with the liabilities, remember that from the question, let's pick them out. There were some customer deposits of 24,530. So customer deposits is the first liability. I'm not listing them in any particular order. 24,530. This is direct from the trial balance. And then we also had payables to other banks, also in the trial balance, 50. So payables to other banks, 50. Let me put my 3 zeros up. And then we also had, yes, there was an unearned revenue. Remember that the rental income from investment property was 90, but we only used 30 because it was relating to 3-year period. The other 60 we said was an unearned revenue, will come as a liability. So unearned revenue from investment property, that will be the 90 minus the 30. Remember that the 90 was the total income. You can do this elsewhere and then bring it here, okay, like we have done. So 60 is shown. And then we also had something in the trial balance called expense, trade payables, and accruals. That's the last one, 3,300, which is also a liability. Expense, trade payables, and accruals, which is 3,300. Now, we are left with the last one. I know some of you may forget, especially this one that I did. And the last one that is left is your tax liability, taxation. Now, from the statement of profit or loss, the tax expense for the year was 468.5. However, we were told in the trial balance that we have paid a tax expense of 100 within the year as an interim assessment. So what it means is that if you are supposed to pay 468 and then you have only paid 100, the difference will stand as a liability. Okay, so when it comes to the tax liability, we can do a workings outside and bring that as well. But because we have exhausted too much time with the video, I just want to be fast. So 486.50 was the tax minus what we have paid of 100. So it means that we have a tax liability of 368.5. So that we can add up to see the total liabilities. This is all the liabilities that we have in this question. So total liabilities will be 28,308.5. And then once we have the total liabilities, we can now have our total equity plus liabilities, which should match with the total assets. So total equity 4,354, total liabilities 28,308. We add the two and we have 32,662.5. And this matches up with the total assets. And then you have balanced it. I know this has been a very long video. That is why I even broke this solution into two. So take your time and then repeat and then listen very carefully. Try looking for new questions and then try solving them on your own. But I know that this video has really enlightened you on financial statements of banks. Remember to subscribe to the channel if it is your first time. Share this video and let others also have a benefit. And until we meet again for another video, it's bye for now. Thank you.